Carbon capture technology is rapidly becoming a focal point in the conversation around climate change and green policies. As governments and organizations worldwide ramp up their efforts to reduce carbon emissions, the spotlight is shifting toward innovative solutions that can help us achieve these ambitious goals. Among these solutions, carbon capture stands out, and it's not just the technology itself that's gaining attention. It's also the investment opportunities surrounding it, particularly in the realm of penny stocks. Penny stocks, typically defined as shares trading for less than $5, are often seen as high-risk investments. However, in the context of carbon capture, they present a unique opportunity for investors looking to get in on the ground floor of a burgeoning industry. With the global push for sustainability, companies focused on carbon capture are emerging, and many of them are still in their early stages, making them accessible to retail investors. What's driving this interest? For one, the urgency of climate change has never been more pronounced. Governments are implementing stricter regulations on carbon emissions, and businesses are under pressure to adopt greener practices. This creates a fertile ground for carbon capture technologies, which can capture carbon dioxide emissions from industrial processes and even from the air itself. The potential market for these technologies is enormous, and as more companies develop viable solutions, the demand for their stocks is likely to rise. Investors are particularly intrigued by the potential for government incentives. Many countries are offering tax credits, grants, and subsidies to companies that invest in carbon capture technologies. This not only boosts the financial viability of these companies but also enhances their attractiveness to investors. As these incentives become more widespread, we could see a surge in the value of penny stocks associated with carbon capture. However, it's essential to approach these investments with caution. The carbon capture industry is still evolving, and not all companies will succeed. Some may struggle to scale their technologies or face regulatory hurdles. Conducting thorough research is crucial. Look for companies with solid fundamentals, innovative technologies, and a clear path to profitability. Understanding the competitive landscape is also vital, as the market is becoming increasingly crowded. Another factor to consider is the broader context of climate policy. The recent global climate agreements and commitments to net zero emissions are creating a sense of urgency and optimism. Investors are looking for ways to align their portfolios with these sustainability goals, and carbon capture stocks fit the bill. The narrative around climate change is shifting from one of doom and gloom to one of opportunity and innovation. This shift is attracting a new wave of investors who are eager to support companies that are making a positive impact. In conclusion, the rise of carbon capture penny stocks is a reflection of the growing recognition of the importance of sustainable technologies in combating climate change. As the industry matures and more companies enter the fray, there's potential for significant growth. For those willing to navigate the risks, investing in carbon capture could not only yield financial returns, but also contribute to a more sustainable future. It's an exciting time to be involved in this space, and the opportunities are just beginning to unfold.